Hello. Mic test. Hello. Okay, hello guys. So seemingly I am live here in the 31st edition of the Trading Opportunities webinar, and I'll just wait a few moments before starting off. Give some time to the people who will be joining in live. And if you are already there and if you can hear me and see the screen, do get back to me in the comment section. So today is the 27th of January 2023, and this will be our 31st webinar. By the way, guys, we do these webinars 3 times per week: Monday, Wednesday, and Friday. All are conducted live at 2 PM GMT, and they are broadcasted simultaneously on TradingView as well as YouTube. So I can see some more people have joined in. How about one of you guys from the audience confirm that they can watch and hear me? Hello, Steve. How are you doing today, man? So, okay, Steve says, thanks. Trading okay, but tricky. Yes, trading is tricky business, and we are here to make it simplified as much as possible by figuring out some high probability opportunities. Okay, Steve, so now you are here and you have confirmed, so I will not be waiting any further for more people. I hope most of them will join in the next few moments or so, and those who don't can just watch it as the recording. Hello, Anna, how are you doing? And good evening to you as well. So everything is almost loaded up here. Just a few moments and we'll start. Okay, so enough of waiting. Let's get ahead and with the disclaimer first of all on screen suggesting that all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do want to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit, loss of profit, or any other situation arising from you using any of the views presented here. Rest of the stuff you can just read in the disclaimer, which is right now on screen. Hello, Philippe. I hope you're doing well. So with that, the legal stuff out of the way, let me now give you a very quick introduction about my work before we proceed with the actual webinar. So my name is Neerav Yadav. I'm the admin and owner of 50eyes.com, which is a website where I have been presenting my views for 7+ years now. Right. And not only I'm the admin and owner of this website, I'm also the admin of 50 Eyes Market Analysis YouTube channel, which you can see right now on screen, which is also the platform where this website is broadcasted live and has been broadcasted for past 30+ iterations, because this is the 31st iteration now. right? If anyone is interested in checking out any of the analysis or trades which we have done before this particular session, they can just hit live over here and check my past webinars 30, 30, 29, 28, 27. You can just click on any of these and all of them have timestamps. So this is the way I've been conducting these webinars so far, right? Other than this, one more thing about the webinar, we conduct 3 of these per week, every Monday, Wednesday, and Friday. Our time is 2 p.m. GMT, right? So this is the timing for these webinars. Okay, going ahead with my work. I'm also the author of the book Think with the Markets: Secrets to Achieve 80% Plus Accuracy Using Elliott Waves, which is available on Amazon's Kindle platform. So basically, it is electronically available in an instant if you want to read more on my work, right? And I'm also the author of the Elliott Wave video course. And if you are interested in learning personally from me, then training program LT is available and you can send the inquiries for it. Lastly, before we move any further, most important thing I would like to show off about my work is that for the past 6+ years, we have been keeping a track record of everything that I have spoken publicly on my YouTube channel, right? So all the analysis and forecast or whatever you would say, I have kept a complete record, as you can see over here, the date, instrument name, what was said about the instrument, and the actual video link, and what really happened. So if you scroll down through these Google Sheets, then you will find that in 2021 we had 45 analysis, 37 worked out, so was an accuracy of 82.22%. So on and so forth. You can check 2020 is 88.52, 2019 is 84.88, 2018 is 84.61, 17 87.50, and 2016 83.34. So why am I showing this off? Because generally even an accuracy of 60% plus is considered very high in this industry, and we have 80% plus for 6 years, and it's actually 7. I didn't get the time for compiling 2022 yet. So this is basically a very big record. You get the idea. This is just to show off that I am a master in the art of applied Elliott Wave, which is the most advanced form of price action, which is what we will be using for discussing the markets today, right? So that's enough blabbering from my end for introduction. Now let's get ahead with the actual webinar content. And Philippe is saying yes, excellent. Yes, good morning to you, Philippe. And hello, Antoine. Finally, good of you to join us before we proceed. Okay, so the way we proceed with these webinars is, first of all, I'll go over the charts of, let me just quickly show off the whole list here. So these are the standard instruments that we discuss in every webinar. By the way, 29 trades we discussed in the last 29 webinars played out, and a few more which we will discuss today. So we'll start our discussion with Euro USD, followed by EURCAD, USDJPY, EURJPY, Crude Oil, Gold, S&P 500, Nifty 50, followed by last at Bitcoin. And currently on screen, as you can see, Euro USD. So let's get started. I already have the confirmation, so let's not waste any further time. Euro USD, there is nothing new. There is just a small development which I would like to point your attention towards. Those of you joining in, our point of analysis or point of reference is at 0.95362, roughly speaking. From this point, we have expectations that this market is forming a possible impulse in the upward direction, which in Elliott Wave terminologies is a 5-way pattern, which should look something like this, as is on the right hand side, right? So as you can see, this is what we think is on the actual chart. And as per the comparison goes, you can say that we are in the 5th. This is the 5th, right? So if you are following me for the last webinars, you already know that we were able to capture the turn from here, and our target minimum was already achieved, and then the next target we were waiting. So next target is around 1.0948, right? So that is exactly what we are currently looking for, and we are currently trailing with the partial profits, with partial position, sorry. So the new thing which is worth pointing out here is that there is a possibility of a diagonal formation in this counter. A diagonal is basically a wedge pattern in price action terminologies, and as a matter of fact, something like this. Now keep in mind, it is possible that this diagonal is already complete. If it's complete, then I'll just push the 5 here, and in that case, the market will go down. Right. However, the more important point or the more significant point is that if this is a diagonal and if the market really breaks below this orange trend line of the parallel channel, then this can lead to some strong sell-off, right? So this is the basically the whole new outlook or new point in keeping in mind is that possible ending diagonal might be in play, and confirmation below orange trend line can lead to good selling opportunities on this counter for us, right? Other than that, if you are still holding longs, it should be very small positions because it almost went there. I am considering at this point as a +1 trade, that is the target as achieved. We don't really want to wait till the very end of the target level. Generally, even going near it is considered achieved. So this brings our tally of number of trades which have worked out to 30 from last weeks of 29. 30 trades in the last 30 webinars have worked out so far, including this Euro USD. Right, and nothing really to add. If upside continues, then I've already mentioned after this we'll look for this upper trend line as resistance level. Let me know if there's anything you guys would like to ask me on this counter. If not, just kindly type in understood or clear before we move on to the next chart. Thank you, Steve, for the confirmation there, and thank you, Anna. So let's, in that case, let's head over and check out our chart of EURCAD. EURCAD again is sort of doing not much, but basically it is doing whatever we expected. So as you can see with the arrows, last time our expectation was that either this market will go straight up from here, which was around 1.458 something, or the second expectation was that it can go sideways or basically sideways within this box range. Sideways within this box range and then up. So these were the two expectations. It is seemingly following the sideways within the box range and then up. So nothing really to add here. It's swing long as we discussed so many times so far. So only those interested in holding swing trading opportunities in this counter can add partial longs. Let's say if you will enter for 10 lots, then you can enter 2 lots here. Furthermore, if it goes lower, then maybe 3-4 lots here. And then when it breaks this high again, this level, then add the remaining positions here. So this will be our play strategy for this counter, right? Personally, again, as I said, there are better opportunities available rather than putting the money in the swing trade. So I will not be discussing it any more detail. That's about it for EURCAD. And just one quick reminder for those who are joining in new, we were able to catch this break. This was our target one, and then we were able to catch this downward movement exactly over here. And this was our target too. So we have captured this movement and this movement. I'll just remove the drawings that everyone can see. So this is the movements we have already captured on this counter, right? So that was about it for EURCAD. I don't think there is any doubt on this counter, but if there is, I'll just check it in the comment section. For now, I'm just quickly shifting our focus to USDJPY, which will be followed by EURJPY. So this is on screen USDJPY, our chart. Thank you, Steve, for the confirmation there. So on USDJPY, our analysis has remained that we are still maintaining bearish bias. And last time when I discussed this counter, I was hoping that this was going down as a wave A down. It was followed by a wave B in the sideways movement, right? We did not have exact clarity of how this wave B was. It could have been a triangle, which may have completed here, which can lead to straight down movement, or it could just be flat or a complex, in which case it will propagate within this box range and it would look something like this, maybe even before any fall, right? I mean, it can look like a lot of things. I'm just drawing some rough price action here to give you an idea that it can do some sideways drama. So basically USDJPY bias is bearish. We are not entering shorts. I'm personally waiting for some sort of proper signaling like around 128 or below 128.38. I am more interested in heading shorts on this counter because if it propagates sideways, then it can go a little bit too much up for my taste. So only swing traders might be interested in holding that, and it is still a trade, but as I said, I'm not interested in it. So our trade setup remains the same. Right, downside I have given the alert level, and upside we have this price range. Let me just quickly mention the level 134.765 and 127.217. So within this price range, sideways movement will continue. Right, that is our quick discussion on USDJPY. I don't think there's anything else to add here. And yeah, just quickly pointing out that we were able to capture this down move multiple times, this lag and then this lag, parts of this lag. So 3-4 times we have been able to recapture bigger moves on this counter and many other moves in between as well. So those of you who are following me who obviously have checked it out, and some people have even traded them. Right. So nothing really to add here. Let's head over to EURJPY. Let me know, guys, if there is any doubt on this counter, and I'll check the comments while I quickly load over to the next chart. Hello, Saron Pretorius on TradingView. Just saw your message. Keep hanging in there. If there is any doubt, just let me know in the comment section and I'll clarify it for you. We generally discuss Forex pairs followed by commodities, crude gold, then followed by index S&P Nifty, and at the end we discuss Bitcoin. Right. So let's now just head over to EURJPY, and thank you, Steve, for the confirmation in the comments. So EURJPY, as you can see on the screen here, it also is accordingly moving accordingly to the plan we discussed last time. So I'll just quickly conclude what you are seeing over here on screen is a diagonal formation from this point of reference of 148.382. Diagonal formation basically is in Elliott Wave terminologies this kind of movement, right? In price action, you will call it a wedge pattern, and basically it consists of 5 waves in Elliott Wave terminologies, wherein the wave 1 and 4 overlap with each other. So this is the price action for wave 4, and if we extend it in back in time, we will see that it is overlapping with the price action of wave 1. So that is what I exactly mean by wave 1 and 4 overlap. However, the more important points to note are that once this down leg is complete, we call it a diagonal and we label it as an A or 1. And then the sideways movement shall ensue, which is what we are calling as a B or 2. Right. So once this B or 2 is complete, then it should take out the last low, which is 137.425. Okay. So in this case, we do not have the confirmation yet if the reversal has started right now, or is it still continuing or progressing as the wave B. In case it is still progressing as the wave B, then it can go up a little bit before the fall. Right. So this is the expected progression on EURJPY. Either we see a straight down movement or we see an up and then down movement. Now we have been able to, if you are not following me for the past webinars, I'd like to quickly point out that we have been able to capture this whole leg down, like literally all of it, and parts of this move down as well. 2-3 trades overall within this continuation of the downward movement we have captured. So you can always check back in any of the past webinars, which, as I said, is available on my YouTube channel, just like this webinar. Just go to live and check one of the past webinars where this part was discussed. You will see me discussing the whole trade setup. Right? This is just for the new audience. So anyways, for the current price action, as I just mentioned, it is possible that this market might go a little bit up and then reverse or straight down. Now straight down, we do not know if it's the case. We will only be able to see after this market has given some strong price action to the downside. Right, but for the fact or for the situation, if it goes up, we have a strong resistance level placed around 142.9 5. Let me just recheck. And the second or the higher part of this resistance box is 144.208. So this is basically the range. If the market goes higher, we expect it to see resistance within this range and form the possible reversal. That's why you see this arrow like this. Right. So upside we have clear, and downside I have already, as I said, currently we don't have any confirmation, and I have just placed an alert so that if there's a big move, I do not miss out. The alert is currently at 138.565, but may need a adjustment. So that's basically our complete analysis on this counter. And those of you who are completely new, this is the pattern we are following. First leg down is called A, up B, down C. Whole pattern is called ABC, movement to the downside. The name for the pattern is zigzag. Right. So this is the pattern we are expecting on this counter. Of course, I have discussed the impulsive progression as well, but doesn't really matter. Both of them have the same progression for the first 3 legs. So that's about it for our quick summary of EURJPY. Let me know, guys, if you have any doubts. If not, do type in clear, Steve, Anna, Philippe, and I do not see much participation from you and Toyn today. So I hope you are there and you are understanding. I'll just wait for a confirmation before we head over to crude oil, which will be followed by gold, which has again achieved our target and probably our 11th trade. And then we'll discuss SPX, which is having some complicated updates, which I need to discuss with you guys. Okay, so thank you, Steve and Jill, for the confirmation, and Anna. So let's head over to the last chart, which is CL, WTI, or West Texas in Intermediate. So last time when we discussed it, not even last time, last to last time, we have been following this count. I'll just quickly point out that from this point of reference, around 70.285, we have expectation of a diagonal pattern, or basically in price action terminology is a wedge pattern, right? And this is the rough outlook we are expecting this market will follow. I'll just readjust it a little bit here. Right. So what basically I'm saying is that we expect this market to go up like this and then possibly down and then up. So if it does all these things, the first leg will be called the 1 up, the second correction is called the 2 down, then the 3 up, then the correction is called a 4 down, and then the next leg is called a 5th up. That will in terms make it a diagonal pattern, right? And most important thing again, as we mentioned in our first chart itself on Euro USD, we were discussing that wave 4 and 1 should overlap, right? Which should be the expectation. Anywho's long story short, we also seem to be having a setup here for the intraday, and the setup is just that this looks like it is heading now for the wave 3. So if we remove everything, you can see that this market has given some sideways movement. So if this is heading for the wave 3, then the A is complete here, then the B is complete here, or the B is continuing sideways. And in either case, once this is complete for the wave B, it will head over for the wave C. So basically, from an intraday perspective or 1 to 2 days trade opportunity, this is a long trade from me, or that is from my angle, right? So either it will go straight up for the C for the wave 3, or it will go first a little bit lower and then up for the C. So that's my quick take, or what you call additional point on WTI is crude oil. And yeah, one last thing. Last time we were also discussing a possibility of a diagonal which was not following the Elliott Wave's guideline of right look, and it has also been relegated. So I will not emphasize much on it. That's about it for our take on WTI's crude oil. Let me just see if you guys have any doubts. More or less, it is according to our game plan. So I hope everything is clear. Yeah, just one last point I forgot to mention. We are expecting resistance between 84.90 to 82.12, but 82.12 it's already at that level. So next level we are expecting is 84.80. That's how I take. I'll just wait a few moments and still room higher as wedge holding. Yes, exactly, Antoine. So that's why I'm saying short term wise, I'm looking for long trades here. There is some comments on TradingView as well. Excel is asking, would you mind showing me how you make your calculations from scratch? I haven't really done any calculation here. It's just a pattern I'm discussing, and the pattern is suggesting upward movement. And as far as the resistance level, which I mentioned, resistance level, it could be either a Fibonacci retracement or it could be standard price action analysis. Let's see. In this case, it looks like it may have been standard price action resistance based off of past chart data, right? And actually, we think we need to readjust this level. So, but I'm not adjusting it right now because it is definitely going to get hit if this market moves as per our analysis, right? 1 second, let me check one more thing here. A, B, and up, C down. So A up, B down, and C. Yeah, so it is as per our Fibonacci analysis, it's a retracement. So what we generally do is we try to take retracements of 50-60%. So this will be your starting point. Let me see. No, this will be your starting point. This will be ending point, and we will use the Fibonacci retracement tool and start from this point and end at this point, and then we will draw the box between 50 and 60. That's how this target came out to be. I'm not very happy with this. It does look like it will probably surpass it, but we have to keep in mind the high probability zones. So that was how I came up with the calculation. I hope that answers your question. I'm not sure what that is. IXA. I don't think it's a name, but if it is IXX, well, I'm not sure. So I hope that answers your question, and let's head over to our next chart in that case. Philip is saying clear. And what about you other participants, Jill, Steve, Anna? Right, let us all know that we are on the same page by typing in understood or something. I'll just load gold now. Gold. So probably 11th or maybe more of the times this has performed. Gold has literally been golden for us, right? I'm not joking even. All the trades we have discussed on gold, they seem to be working out like clockwork. Left and right, it's working out. As a matter of fact, last time when we were doing live analysis, I said that there's a live trade which has just came into picture. Let me go to the shorter time frame here. Last time we were here somewhere, market was somewhere here, roughly speaking around 1925 something, right? And I said very clearly that this market has an up leg remaining, right? We already had the target around 19, what is this? 50. We have this target for quite some time now. 1950, and this market literally after the not even after the webinar, during the webinar it went up, and most all, I mean, I will call it target achieved. It's not like you will care for 1 or 2 points here. We don't really wait till the end of a target. It's not very wise. So now before we move any further with it, I'll just like to quickly again show off some things here on this chart of gold. So if you are not following me from the past webinars, then this is for you guys, that we have been able to capture way too many movements clear. Not way, I mean, literally all of the big up moves we have been able to capture. From here, we were able to capture some part. This leg, we were able to capture. This leg, we were able to capture. This leg precisely, what do you call? I am forecasted this particular leg precisely in live market. This from what is this, around 13 December to, it ended on 14 December, I think, or some on 13 December itself. But yeah, around this part, this leg we were able to capture. And part of this moment we were able to capture, right? And I specifically remember this leg. I was able to capture this leg up, then this leg down, and then this leg up again. Like literally all of it. From here to here, then down, and then up. All three here, right? And then some parts here and there. And the most recent one is this last leg up. Right? So this brings our tally to, I think, 11 plus something. I don't know. But I mean, I don't know exactly, but it's definitely 10 something now, right? So out of the 30 trades which have worked, actually, this including this one, it is 31st. So 31 trades now have worked so far in our last 30 webinars. And out of these 31 that have worked, at least 10 to 11 are just from gold. Think about that, right? I hope you guys are benefiting from it, right? If you are not, then you should take these webinars seriously, attend them live, and of course, do your own analysis. We are literally mining gold here. Not even joking. Okay, so enough of past glories. Let's head over and see what's happening now. So now that it has achieved the targets and everything, it's time to readjust the analysis. We expect this to be 3, we expect this to be 4, so we expect a correction in the downward direction. That means all I need to check is if the targets are all right. If not, we'll readjust them. So this is our starting point for wave 2, starting point to ending point of wave 3. And what we gotta do is first delete this line. It's not useful anymore. Now we have the 23.6 here, 38.2 over here. So as long as this market is above 1875, 76, that is, it is above this level, we will say that it is holding the longs. Okay. And we expect this market again to form one more leg up, but not right away. Not right away because we expect either it to go to 1913 or to 19, sorry, not 19, or to 1890. So it will either reverse from 1913 or 1890 is what we expect. Okay. So I'm not really interested in longs. As a matter of fact, if you are very quick and smart, and if I was not doing this webinar right now, this is a scalp. I would have entered some shorts here, and it, as you can see while I'm talking, it's already going down. So a scalp basically means you'll enter with a good size position, and then you'll quickly exit once it takes out this low or this low. Sorry, this low or this low. So these are very fast trades in and out in seconds, sometimes minutes, but that's about it. So there's an opportunity which is passing away while we are discussing this webinar, right? And yes, that brings me to one more important point. If you have not hit the like button so far on the respective platforms you are on, kindly do so right away. We definitely need those likes and shares and comments so that more audience can come in and join us. That will allow us to continue doing these webinars, right? And I'll request one more thing here, that once these webinars are complete, you kindly share my tweets or share the links for the webinars live to your what you call WhatsApp groups, Twitter, or Slack, or whatever traders groups you guys are in, if you are in any, right? If you are not in any such groups, if you are having social media handles, you can just go to my Twitter profile. This is something I like to request here. I'll just take one moment before our discussion continues. This is my Twitter handle, 50_EYES. So once the webinars are complete, I always share my link here for the completed webinar. So I would request that you guys hit the retweet button here, or like, or both, right? So this will allow me to get a little bit more reach on these platforms and get a little bit more audience, which is definitely the need of the time, right? So that's just my request from you guys. Follow me on 50_EYES and make sure you share the content, right? So getting back to our actual discussion here, Rajiv is saying like done. Thank you, Rajiv. Okay, I'm satisfied with your response. Thank you. You're welcome. So yeah, in that case, let's head over to our analysis. I think I've discussed the major levels of possible reversal. And this particular pattern, it could be either a complex down or it could be just a simple zigzag. Doesn't really matter. What we expect is that it will just give a little bit lower moment right now. Okay, so actually there is not much to add here. If you guys have any doubts, you can just type it in the comment section and I'll take it from there. I'll wait for a few moments for your doubts. And by the way, guys, if you are understanding whatever I'm discussing, please do hit the, not hit the, please do type in understood or clear, okay, before we move over to next chart of S&P 500, which by the way has some new formations. By the way, just out of context, how many of you guys are on Twitter? Just checking in, because I do tweet a lot. Not tweet a lot, I mean I tweet the links here. I do push it on Facebook, but I don't think people use Facebook any more these days. Just checking in. Anyways, I'll check your responses later. I'll just head over to the chart of S&P here. Give me a moment here. Let me just first check which one is the one we are following before I go on discussing things. There are actually 2-3 of different analysis we have running on S&P's 500. That's why I'm just taking a few moments here to check. I'll just discuss it on the blank chart. I think that would be even better. So S&P actually has multiple new possibilities that I was checking out late night, right? So first of all, one thing I just noticed is that the bearish possibility is definitely not out of the question. That is very important to note right now. Why? Because this is an A up, B down, and the C up as a diagonal, definitely not out of the question, right? Can even go a little bit up and then reverse fast. And the reversal can lead to new lows as well. Okay. So this is one thing I would like you guys to keep in mind on S&P's 500, right? There is one other possibility which is still suggesting bearishness after a bigger up move, but I'm not in favor of that. If the bearish move is going to come, I don't want it to see go like this. Maybe a little bit up, maybe a little bit spike above the trend line is fine. But more or less, what I'm trying to say is that this diagonal possibility is really strong, and this is the new updated alternate bearish count on this count. Pretty self-explanatory. Those of you not familiar with Elliott Wave or what I'm drawing here is we are talking about an ABC kind of pattern. In this particular case, it could be called a zigzag, or even a flat maybe. But that aside, the first leg up is called an A. Actually, it's more suited as a zigzag. Correction down is called a B. And then there's a new leg up, which will be taking out the high of wave A, which is called a C, right? So we have the A up, we have the B down, and this is the C up. And the C up is forming, as we can see over here, a possible diagonal formation, right? So that is what I have drawn here, wedge kind of pattern, right? And based on that, my interpretation, as I just said, is, let me remove everything, that it is possible that it takes a distance around this region, this elliptical rough ellipse region, and then it sees a reversal. Extremely strong possibility. I'm definitely not ruling this out. And just keep in mind that 2nd February, Fed is coming up with some new stuff and whatnot. You can just check Forex Factory yourselves. I'm not going to do that, but just pointing it out that some important events are incoming. So maybe the market will wait till that point in time, or maybe not. But that's our analysis for now. And as far as the bullish possibility is concerned, you can just check our last analysis. It is still valid. The bullish counts are still valid, but we will need to see some strong up leg before I am interested in taking any longs because of these bearish outlooks. So that was our trade, or not trade actually, our analysis of S&P 500, the updated analysis. Let me know, guys, if there is any doubts or questions regarding whatever we discussed right now. I'll wait a few moments in the comment section before we move over to the interesting fall in Nifty. So, and I was asking, is it possible we have wave B where you put C in a higher level? Let me see. We are talking about a wave B like this, A up, B down, and then C up completing the B, then yes, we can have a B there. That is actually one of the counts. We already have it. I mean, this is our main count. We have been following it for a very long time now. So if that's what you meant, then yes, that's possible. And what I'm talking about here is A up, B down, and C up as a what do you call flat pattern here, right? And once this flat pattern completes, we will write the B here, and then we expect the C down to continue. So this is one of the counts, and that's why I also said that there is also the possibility that it can go up first and then come down. But we are not much interested in something like that because that comes under swing perspective, and here we are trying to figure out the recent or what do you call short-term opportunities, which I think might be forming on this counter. So yes, hopefully that answers your question. If there is something else, you can just type in again and I'll just check again. Jill is saying great targets for turn. Steve is saying wedge is clear, and Philip is asking about upward trend line. Bear scenario is still okay. Bear scenario, I think he means about upward. I'm not sure what you mean by that. Let me just see. So yeah, Jill was asking what you get targets for turn. So see, if what I was saying was ABC, right? Let me just quickly draw one thing here. So if this market is following this triangle kind of pattern, that this is the D and this is the E, then I do not think that this market should go much higher. You can just draw the trend line here, right? It can maybe give a small movement above the trend line, but I don't think it will. It should. Like in practice, it generally shouldn't be doing that. It generally doesn't do that a lot. Right? So if you are looking exactly for targets, just head over to your Forex chart and draw this trend line. That should give you a rough resistance level for reversal, right? And as far as my own analysis is concerned, I am also of the view that this line itself is forming the resistance, and if the exact retracement levels are concerned, then it's already touching around 40 58. It's actually 40 59 60 something, right? So the retracement levels are already there, it's already touching them. So maximum it should go is from the retracement level to the line, right? As a matter of fact, the line is also coming around 40 80. Roughly speaking, you can just check the exact levels at your end on your chart, right? So I hope that answers your doubt, and let me see if I can answer what Philippe was asking. I was not able to understand it. The question very clearly is saying about upward trend line bear scenario is still okay. Upward trend line bear scenario is still okay. Yeah, that's what I said. Bear scenario is still there. I'm not sure what you meant by upward trend line. Hopefully, this discussion which we just did clarified your doubt. If not, just type in the comment section and I'll take it. Okay, downside target. Downside, if it really is the downtrend, then it should go lower, right? Lower than this. So we don't really care for a target right now because that's a very wide movement, 3770. Right now, all we care is to see if the analysis we are thinking will perform or not. And targets are sort of irrelevant. It's such a big, wide movement. No matter if you exit here, 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 the profits will be plenty. Should be plenty. So yeah, that's our take on S&P 500, guys. Keep in mind the new bear scenario which we just discussed. And as far as the bull scenarios are considered, we have already discussed it last time. Not last time, I think last to last time in quite detail. And I hopefully have discussed all your doubts. So let's head over to the interestingly huge fall in Nifty today, which will be followed by the BTC discussion. And yeah, guys, one last thing again, I'll repeat because not everybody joins in the webinar to watch it full. That if you have watched this S&P analysis and liked it, kindly hit the like button on your respective platforms and make sure you share the content after you have watched yourselves, because sharing is important to increase our reach, and increased reach is important to keep these webinars coming. Quality content to you guys also means that we need quality number of audience incoming to our YouTube channel. All right, guys. So let's head over to our next chart. Let me even see which one I'm following. Too many charts of Nifty on screen. Yep, there it is. Is 50. So last time when we discussed, we were not very having very clear clues of which way this market was going or heading. Possibility for upside was that it should reverse right away, it should not break the low. Possibility for downside was that it can go lower and much lower with the with the count as WXY. Actually, no. 1 second. Yeah, the count was this. Yeah, so that was the bearish count. So now things become very simple. In the morning itself, I was live at 9:15 exactly when the market opens, counter opens, whatever you will call it, and the market basically literally gave me a very clear and simple trade. Right at the open, within the first 2-3 seconds itself, it started falling. So remember, guys, when we last discussed this counter, I said it that this already has achieved our target. It was actually below our 50-60 level, right? And the maximum consideration was also achieved. So when it gapped, not necessarily gapped, it's not much of that kind of movement. But when it opened and fell a lot within the first few seconds, I entered shorts within the first few seconds. I know Vega was high, so positions were a little bit risky, but I was awarded with pretty handsome profits, and I exited with those profits. And then for the next 1 or 2 hours, I kept shorting it here and there. So I basically captured part of this moment, some part of it, and very minor part of this upside moment as well. Overall, a big plus day. Actually, not very big plus day, but a plus day. Big was when this when happened. So now let's see what is going on here, right? So as I said previously, it could be counted like that in sense that we are taking it as a diagonal. So anywho's, long story short, what we expect is that from this point onwards, we are expecting at least 3 waves down. If we, because see, as I said, we have 2-3 counts running in one, which is a triple zigzag, another one it's a simple double zigzag. So in this particular scenario, we will expect that this market is going down for a A down, a B up, and a C down, right? So when I did the short-term time frame analysis, I figured that this market may have formed the A here, B here, and this could be the 1, 2, 3, 4, and 5th. So I know the B is small and the A is smaller compared to the C, right? So that's not an issue. Things like that happen all the time. So long story short is it is possible that this market has formed a low. That is definitely a possibility, right? Second possibility is that if this is not the case, then this market is heading for a nested 1-to-1 formation, in which case much lower levels are possible, right? And I'm not really interested in discussing that, because unless this market forms sideways congestion pattern, like let's say a flat or correction of some sort, let's say complex or whatever, within this price range, I will not be interested in looking for any shorts here right away. Another case would be if it opens gap down, that's another story, but As I said, if it forms sideways patterns here, then I'll be interested in analyzing them and seeing what kind of pattern it is and what triggers we have for it for possible selling opportunities. If it does not do that, then it is safe to assume that we may have, just keep in mind, may is the important word here, may have formed the base here for the time being, right? Fits the corrective patterns, fits the zigzag to the downside for the completion of double or triple zigzag. So that's about it on Nifty. Wait and watch, sideways to bearish, but we need to see sideways trend first to confirm any possible sell-offs. If nothing like that is seen, then it is possible that the base may have formed and new upward movements may get initiated, right? So that basically brings down this analysis to the conclusion that for bears to take control, we want to wait and see sideways movement. For bulls to take control, they don't really need anything necessarily specific here. They may have already been in right now. So that's my quick analysis on Nifty. Let me know if there is any doubt, guys, before we head over to our last chart, BTC. You too have a nice weekend, Antoine. So Jill, Philippe, Anna, do you guys even care for BTC? Because the last chart, oh, you are there. Hey Rajiv, I've been trying to reach you, man. Just give me a call after this webinar is over, if you are free. Okay, guys, so let's head over to our last chart, BTC over here on screen. It is following the analysis again quite well. Okay, Jill follows BTC. That's good to know. Okay, so BTC is just let me quickly show you some things. So if you are not following us from the past webinars, we were able to capture this leg up, right? Till what point? Till this point. So this moment we were able to capture, and this was broadcasted again in the live webinar. So you can just check by going to the YouTube channel and checking the date and finding out which webinar was near it and checking the whole timestamp and everything on my YouTube channel 50 as market analysis. Right. So that was our past achievement. I always like to point them out because I don't know how many of you people are joining in for the first time. Right. So just to give the guys a context, guys and gals, whoever is joining, I mean. So coming back to the analysis, our analysis suggested if it sustains about 23200, then we will be interested in possible longs. Where is 23200? It is over here. The market has sort of told us clearly that analysis is good because it is holding 23200. If it breaks, then it will be still better because the market is respecting our level. That's a good thing. So long story short, it has not established itself above 23200. The only time it tried to do that, it was sold off. It is as if the market is telling us that neither of this level is perfect. Wait for it. So anyways, enough drama from my end. So conclusion, wait for the market to establish above it. That means the market closes above it on the 1 hour time frame or 15-minute at least, and then form some price action for some time above this 2320 level. Okay. Once that happens, then we will consider the bullish possibilities, and the bullish possibilities are already pointed out on the chart here. Wave 1 up, 2 down, 3 up, 4 down, 5 up. This completes the 3, heading down for 4. Once the 4 is complete, we'll head up for 5. Right, so bullish count is already there on screen, and if the bearish count is followed, then long correction which can take this market to 18,000 levels or lower is possible. If bullish count is there, then we do not expect the market to go this much lower. Then only a little bit downside is expected. More specifically, expect around what is this 21,100, let's say. So below that, if it happens to go, then we are expecting bearishness. And if it reverses for the fifth wave up, then 21,100 or maybe a little bit higher level, it can reverse for the wave 5. So that's our analysis on BTC. I hope that was clear enough. With this red lines or arrows, you can see the bullish count. The yellow one, you see the bearish count. Okay. I've given you the levels for reversal, for the establishment of uptrend, and confirmation bias, not exact confirmation level, but levels which will start looking for bearishness also below 21,100. I'll think that this should be enough. And let me know, guys, if you have any doubts before we close this issue of 31st webinar. And it feels nice that we have done 31 of these, 30 plus. And I'm saying I am for SP only at the moment. Thank you and have a great weekend. Same to you, Anna. And thanks for staying till the end of these webinars. You're welcome, Jill. And I think that's about it, guys. There's no doubts here. So thanks for joining in, guys. Make sure you have shared the content and retweeted, or whatever platform you are using. Just put the hashtags and share my links. And I'll see you guys in the next one on the coming Monday. You're welcome, Steve. Have a great weekend. Okay. Bye, guys.